Let's look at paragraph 4 first. Notwithstanding the provision of paragraph 1 and 2, fixed place PE, inclusion in the definition of PE, where a person other than an agent of independent status to whom paragraph 5 applies. Clearly, if you are covered under paragraph 5, the question of looking whether you are not a dependent agent does not arise. Right? Is acting in a contracting state, is acting in India on behalf of an enterprise of the other contracting state, a US enterprise. So he's acting in India on behalf of a US enterprise. That enterprise shall be deemed to have a PE in the first mentioned state, which is India. If so, you are acting fine on behalf of foreign company, fine. You're not an agent of independent status, fine. But even then, you need to satisfy one of these conditions. He has and habitually exercises in the first mentioned state an authority to conclude contract on behalf of the enterprise. He has no such authority but habitually maintains in the first mentioned state a stock of goods or merchandise. He habitually secures order in the first mentioned state. We will look at these three independently in detail, but first let's see what are the characteristics of the first few lines that we saw. The first characteristics is that it overrides the fixed place PE or the inclusions in the PE, paragraph 1, paragraph 2. Second is, for the applicability of this, the agent should not be an agent of independent status as per paragraph 5. The activity should be on behalf of the foreign enterprise and not in his own capacity. If the transactions are principal to principal basis, not a sham, but actually on a principal to principal basis, he's acting on his own behalf, not on behalf of the foreign company, and therefore not a PE. Activity should be in the source state. If the agent is doing some activities outside, not covered. If all these conditions are satisfied, the PE shall be deemed to arise in India. Let's look at them one by one. So the first clause says he has and habitually exercises in the first mentioned state, which is India, an authority to conclude contract on behalf of the enterprise. So what this means is that the agent, first of all, should have the authority. Now, whether it is written or oral, formal or informal, doesn't matter. He should possess the authority. And second is, mere possession is not complete. He should habitually exercise that in India. And what's the authority? To conclude contracts. Now, this does not include the word negotiate and conclude, or negotiate or conclude, right? Which means even if some bit of negotiations are done, unless the conclusion happens, right, then it will not be treated as a PE. But you need to find out a thin line between these two. If the negotiations are to such an extent that the only thing that is left is to just sign a piece of paper, then effectively he's concluded the contract, right? But if he negotiates some aspect whereby the decision or the key points or key elements of the decision are to be taken by the foreign company, you can still argue that the conclusion has been done overseas, right? Unless his activities are limited to those mentioned in paragraph 3, preparatory or auxiliary activities, which if exercised through a fixed place of business would not make that fixed place of business a PE under the provisions of that paragraph. So when you are a dependent agent, if you are concluding contracts which are related to activities which are preparatory or auxiliary in character, in that case it will not be treated as a PE. But otherwise, if you possess as well as you habitually use your authority to conclude contract on behalf of the foreign enterprise, you'll be treated as having a PE in India. Let's see some of the characteristics of this particular clause before we move to clause B and clause C. So the use of the authority envisages 2 points. You should have the authority and you should habitually exercise. If you don't have or if you don't use it, it's not relevant. In what right should the authority be exercised? It should be exercised for concluding contracts on behalf of the foreign enterprise. What if the activities are covered under paragraph 3, preparatory or auxiliary? They shall not result into a PE. Now, one thing which also needs to be noted here is that the conclusion of contract should be in relation to some revenue generating activities, right? If you are just trying to do some pre-sales activity, right, some liaising with the client, that may not result necessarily into an authority to conclude contract. Secondly, the use of the word habitually indicates that when the exercise is done, it should be systematic. It should be continuous. I mean, not say that it has to be every day, but maybe during every interval, it should be done in line with the nature of the business of the foreign enterprise. He has no such authority, but habitually maintains in the first mentioned state. There's no authority to conclude contract, but he maintains in India a stock of goods or merchandise from which he regularly delivers. It's not an occasional delivery. If it's an occasional delivery, it would be covered under preparatory or auxiliary activities. Right? Goods or merchandise on behalf of the enterprise and some additional activities. Not only should the delivery be regular, but there should be some additional activities conducted in the state, in India, on behalf of the enterprise which have contributed to the sale of goods or merchandise. Not only should the activity of delivery be there, but some sales activity or some other activity which results in the conclusion or the sale of goods should be carried out by the agent. The second piece may be missing in some of the treaties, right? And you need to watch out for this. So what should be maintained? Stock of goods or merchandise. The delivery should be regular. In whose name should the goods be delivered? On behalf of the foreign company. And is only maintaining a stock of goods sufficient? In many treaties, yes. But in the present case, there have to be some additional activities in the source state on behalf of the foreign enterprise, which should contribute to the sales. So what this does is, it actually restricts the scope of a PE. Because if you are just delivering on a regular basis, but do not do anything else in the source state, that may actually take you out of this clause. And then the last one, he habitually secures order in the first mentioned state wholly or almost wholly for the enterprise. Now, when you say secure order, while in this particular treaty it is said that it has to be for the enterprise, in some treaty you may find that the reference is to enterprise plus other companies which might be under common control or which are controlled by this enterprise, or maybe a parent of this enterprise, right? The order securing has to be done on a habitual basis, systematic basis, not a one-off transaction, right? Wholly or almost wholly has also been interpreted in several decisions. And what they have said is that it should be something like either 100% when you talk about wholly, and when you talk about almost wholly, it should be at least 90% or more. Unless this is the case, you cannot say that the agent is securing order wholly or almost wholly for the enterprise. Now, when you say wholly or almost wholly, what is going to happen? Suppose there's an agent, okay? He does two businesses, B1 and B2. B2 he is doing on behalf of the foreign company, and he's 100% dependent on B2 for this. B1 he does for a lot of local customer and maybe some foreign companies as well. When you talk about securing orders, this has to be seen vis-a-vis the activity of the agent which is being carried out for the non-resident. You do not need to see whether the foreign company has only one agent. What you need to see is, for the activity that we are considering, how much is the dependence of this agent on the foreign company. If this dependence is 100% or 90 plus, it is construed that this agent is a PE, even though he may have certain separate businesses, right? In case of securing order, one other thing which is relevant is how does the agent conducts himself. right? If he represents that if I accept an order, consider it as accepted by the foreign company, that is something which is referred to as securing order, right? If the customer believes, due to the representation of this agent, that if he agrees, the contract is done, that's where it is said that the agent is securing orders for the foreign parent in India, right?